Hi, everyone. I'm Matt Clark, research analyst for Money Markets, and we've got your weekly marijuana market update today. I want to start by thanking everyone who does watch our videos. It's kind of a strange time to be in the market. Things are up and things are down, but just know that Adam, Charles, and I, we're going to have you back throughout all of it. Now, make sure you subscribe to our YouTube channel and get notified each and every time we post a new video. Check out moneymarkets.com as well. You'll be able to search our proprietary stock rating system, get ratings of thousands of stocks that we have. You'll see a breakdown of fundamental and technical ratings that we use to make up the overall stock rating. So just go to moneymarkets.com. In the top right-hand corner of the website, you're going to see a little search box. You can type in any ticker or company name in that search bar, and you'll see its ranking. You'll get its stock chart, fundamental data, any analysis we publish, and it's all right there at your fingertips. And you can also build your own watch list and track stock performance at moneymarkets.com as well. It's all on the site, and it's all available to you to use for free. Now, today, for today's marijuana market update, I'm going to talk about a potential problem in the cannabis sector. It's not really a potential problem. It actually is a problem. But I'm going to talk to you about how it can be fixed, and more importantly, how you can gain from it. Now, cannabis sales really flourished last year. According to research market firm BDSA, 2020 was a great year for cannabis, but 2021 was even bigger as sales topped $25 billion. That's a 40% increase from 2020, in case you were wondering. So a significant increase over what was already a very good 2020 into 2021. Forward projections suggest cannabis sales could reach $30 billion this year, which, by the way, is something that I predicted last year was going to happen here in 2022. And it could reach between 30 and upwards of $45 billion. Now, the heightened sales has created a huge market for mergers and acquisitions in the cannabis space. We've talked about this before. The cannabis sector had about 278 related mergers and acquisitions in 2021, compared to just 201 in 2020. So you're looking at about a 38% increase year over year. In December of 2021, the sector saw a record-breaking activity with 33 M&A deals valued, whereas the previous high months were March and April, also of 2021, where we had 31 and 32 deals announced respectively. Now, all told, in 2021, the deals were valued at about $9.4 billion. And that's compared to 2020, when M&A deals were valued at $4.5 billion. So we've seen the valuation of the deals that companies are getting into more than double in just a year. So we're seeing a much more aggressive time in the cannabis space for mergers and acquisitions. And it suggests that companies looking to merge or acquire need additional capital to do it. It's not cheap. It's not one of those things where you just walk in and say, hey, I want to merge with you. No, there's negotiation. The price never is what it is when it begins. But banking regulations here in the United States are strangling the amount of money that cannabis operators have access to complete these mergers or acquisitions. Because again, like we've talked about, they're not cheap. Current law leaves traditional banks open to anti-money laundering laws, regulatory issues, and additional penalties from working with cannabis-related companies. So it kind of really closes off the amount of money and the ability to get money that cannabis companies, these operators, have in order to grow and expand, which is why we've seen headwinds in the cannabis market for so long. The legalization status of cannabis across the U.S. adds additional pressure as it broadens the market for potential M&A deals. Basically, it allows larger operators to expand into previously untouched markets by acquiring smaller ones. But again, when you're limited to capital, it's very hard to expand your business by either acquisition, merger, or just basic expansion of what you do. Now, in 2021, lawmakers in Connecticut, New York, Virginia, and New Mexico all adopted legalization approving cannabis for recreational use. Alabama approved a medical program. So the list of states approving cannabis on some level continues to grow, and additional states are looking at measures for 2022 and 2023. I would keep an eye on Missouri, which already recently passed a legal medical cannabis program in February. Then you've got North Carolina and South Carolina. Both state assemblies are looking to vote on legalizing cannabis this year. If not, it could be put to a statewide vote. And then Delaware, Rhode Island, and Maryland are expected to start debating the issue this year in their state governments. And sales in New Mexico are potentially going to start as early as April. So with the recent surge in M&A coupled with the expansion of legalized cannabis, overwhelming pressure is put on cannabis operators for capital as well as for space, because you can't just move into a company, into an area and ship product from somewhere else because it's not legalized federally. There's no interstate commerce. So you have to basically produce the product in the state you're in. There are ways around that, but it's very hard. So this is where I look at things like real estate investment trusts or REITs to come into the picture here, because they have the ability to both provide capital and space to cannabis operators. Now, REITs basically own property and then lease it to companies in a related space. There's REITs for office space, for shopping centers, for warehouses, all sorts of stuff. And there is actually REITs for cannabis. They own property that are used by cannabis operators to either grow or to have a retail base of operations. How it works for operators to generate capital is that the operators can basically sell their property to a REIT in exchange for cash immediately and then stay in the property by signing a long-term lease. So basically, if I have a house and I need cash immediately, but I don't really want to leave my house, I can find someone who's willing to buy my house, give me cash, and then rent the house to me on a month-by-month or a long-term contract basis. REITs can operate the same way for cannabis operators. It's a little bit smarter in the cannabis space for REITs than it is for the house thing I just told you about. But so they get an immediate infusion of cash without losing the space they need to either grow or to sell product. Now, using traditional lenders can prove to be a very expensive process for cannabis companies and even include them selling off parts of their company. Basically, a bank may say, okay, we'll loan you the money, but we want as collateral shares of your a percentage of ownership in your company. And smaller operators don't really want to do that. They don't really have, even larger operators don't really want to do that. But REITs can give cannabis companies non-diluted capital, which is basically money without selling any shares off. They can give that non-diluted capital almost instantaneously. Now, one strong player in the REIT cannabis space is Innovative Industrial Properties Incorporated. It trades on the New York Stock Exchange, and its ticker is IIPR. Now, the Maryland-based company specializes in owning properties leased back to experienced state-licensed operators for medical use cannabis facilities, but they also they have gotten into the recreational space as well. Now, if we look at its stock chart over the last 12 months, IIPR is up about 12.5%. It had a strong run from May 2021 to November 2021, where the stock gained 74% from a 52-week low to a 52-week high in that short amount of time. In fact, it was right around the time, it was right before that, I had recommended it to our cannabis watch list and saw massive gains. I think we wound up seeing a maximum of about 83% in terms of gains that we saw on IIPR whenever we had it on our watch list. So it did very, very well whenever we recommended it. Now, keep in mind, in the last 2 years, going back to 2020, IIPR stock is actually up 222% from start to finish. Now, it is trading a bit sideways now, and it's testing some resistance at between $190 and $195. A break past that level could see another strong run of the stock. And a big strength of IIPR is that the company generated about $204.6 million in total revenue in 2021. That's a 75% increase from where it was in 2020. The REIT also invested $714 million in new acquisitions, which is the highest amount of any year since the company started. And we can see from this chart, the company is only going to get stronger. IIPR is expected to more than double the total annual revenue to around $441.8 million by the end of 2024. And as you can see, the trajectory of that total revenue shows a nice upward movement over the next 2 years. Now, according to my Cannabis Power Rating, which rates cannabis stocks on a variety of metrics against each other, we're slightly bullish on IIPR. The stock rates a 61 overall, which puts it just above the middle of the pack of all cannabis stocks that we rate. Its strongest showing is with Momentum, where it scores an 82. Of course, that 222% jump in stock price over the last 2 years has helped that. It's trading a bit sideways now, but it has weathered the massive headwinds experienced by other cannabis stocks a bit better. IIPR does score a 31 on value, as its trading ratios are higher than its peers. However, the company is operating with a 97.8% gross margin and a 66.2% operating margin, both very strong and both better than their peers. And there are other cannabis-related REITs out there you can jump on to look at this trend in REITs being a strong source of capital for cannabis operators. You've got Power REIT, which trades on the New York Stock Exchange with the ticker PW. There's New Lake Capital Partners, which is an over-the-counter REIT, which is recently launched. It is NLCP. And then you have AFC Gamma Incorporated, which trades on the NASDAQ under AFCG. Now, this is a mortgage REIT in the cannabis space. It doesn't really work on property. It works on mortgages. So it's a little bit different, but it is kind of a specific REIT to cannabis. But in looking at strong players with already a face in the cannabis market, IIPR is already well known and has strong ties to big cannabis operators already. They deal with a lot of them over several states across the country in leasing out property. And they're just building that portfolio by investing in additional property to then turn lease back to cannabis operators. So as sales continue to increase and the M&A market in the cannabis space grows, you can look to these REITs as saviors for cannabis operators to obtain that non-diluted capital to fuel potential expansion, at least until Congress decides it's worthy of their time to debate the possibility of softening banking regulations, which probably isn't going to happen anytime soon. Also, another thing to note is that the REIT does pay out a dividend. So the forward dividend at last check was around 13%. So it pays out about $7 a year per share. So it's pretty strong in terms of its payout. That was the last I checked. I could be off on those numbers, but REITs do pay out about 90% of their earnings back to shareholders. So that is a nice way to generate some additional income on top of already owning a stock that has the potential for strong gains. So I would look at IIPR. I've recommended it before. I'm very bullish on it. I think it's going to have the next couple of years are going to be very strong for IIPR's bottom line there. So looking for cannabis, maybe don't want to get into a cannabis operator. Let's look at something that's maybe a little more pick and shovel and look at IIPR as a cannabis REIT, real estate investment trust, as a potential investment opportunity. Now, if you've got a question or about a cannabis stock or maybe the broader cannabis market, email me. The email address you can reach me at is feedback@moneyandmarkets.com. We'll drop that down below right there. Or you can comment below here on our YouTube channel. You can send us a question either way. We'd love to see. I love to answer your questions whenever we get them. If you do send us a question and we use it, we're going to send you some free Money and Markets gear. It could be a t-shirt like the one I've got on here. We've got hats, we've got sweatshirts, we've got lots of other stuff. It's springtime. These shirts are actually really comfortable. So a nice potential addition for your wardrobe. Just send us a question to either feedback@moneymarkets.com or comment down below here on YouTube, and we will get you hooked up. Don't forget about all the great content we have here on our YouTube channel. It is the best investment insight for you, and it is all there for free. Follow me on Twitter. I give you even more insights, not just into the cannabis market, but the broader market, sports as well, because I'm kind of a sports nut. You can find me. My Twitter handle is @InvestWithMattC. That's Invest with Matt C on Twitter. Thanks again to everyone who watches our videos. We do it because we want to give you the best investment information for your portfolio to grow your wealth. And we want to give it to you. We feel like YouTube is a great medium to do that. So thank you again for all of you who watch our videos. Check out moneymarkets.com every day. We give you content that provides safe, sound, smart, simple, profitable investment information, all there for free. We have our Green Zone rating system right there for you as well. You can track the ratings of thousands of stocks. You can build your own watch list, sign up for our free daily e-letter. You can do all that. It is absolutely free. Moneyandmarkets.com is your website to go to. I'm Matt Clark. I'm research analyst for Money and Markets, your host of the Marijuana Market Update. Until next time, everyone, safe trading.